So here's a story that jumped out at me from the UK. The recession is cancelled, Steve. Like it was several shows ago when I told you the recession was cancelled, but this time it's even more cancelled. The Office for National Statistics today, it's Friday the 31st of March, have gone back over their figures and looked down the back of some sofas or something like that. I'm not quite sure exactly what happened, and decided that the GDP numbers for Q3 and Q4 in the UK need adjusting because, well, I guess if companies can adjust their EPS, why can't we adjust GDP scores? GDP in Q3 was supposed to have been down by 0.2% and has now been changed to down by 0.1%. And that's Q3 of last year. But Q4, which was supposed to be flat, fending off a recession by technically not going backwards, is now up by 0.1% in Q4. So the UK is doing, or I guess has been doing, better than people were giving it credit for. And by people, I mean the people who were supposed to be finding out how much credit they should be giving it. Apparently there were better than expected results from manufacturing and building. And it's that second one that stuck out at me. Steve, if I asked you, what do you think the worst performing stocks in the last year from the FTSE 100 are, where would you go?
Home building and builders.
Yep, one of them. Anyone in particular?
Probably Persimmon.
Yep, there's one of them. That's the second worst one. The worst one, unfortunately, he's not here to discuss it with us, is Segro. This is, by the way, on a share price only basis. I'm not factoring back the dividends on these. So just in terms of share price, Segro is down 43%, Persimmon is down 42%. This is over the last 12 months as of today when I had a look. These are down quite significantly, and apparently building's not going as badly as people thought. There was, I think, about 1.4% growth in the building sector, pushing GDP into sort of positive territory here. Does that mean we should be more interested in either of these? Stephen, are you interested in either Persimmon or Segro?
Segro, maybe, but you've got to remember that inflation's at 10%, so for something to grow only 1% is that is a net decline. It just means that prices have gone up a little bit, but yeah, I'm not particularly interested in Persimmon, and I think the reason is the reason it's gone down so much is because it's an income stock. It was there to provide income for people. It was paying a pretty big dividend. I think it was about 10.1% without the special in it, and about another 8.5% when you add the special in. So this was a big income stock for people. The issue is that when income stocks stop paying income, they become very not as desirable. Well, when income stocks are cutting income, they become less desirable to people. So it could be an opportunity for Persimmon. I don't know. It's not a stock that I would buy just because of their fabled history of not building the best buildings in the world. They're definitely not my favourite builder, and definitely not my favourite customer. But yeah, Segro could be interesting. It's still a big REIT in the UK, though.
Yeah, it is a big REIT in the UK. Persimmon, when I was thinking about this, I sort of thought, okay, so evidently house builders haven't been beaten up as badly as I thought they had. Maybe it's not as disastrous as it might have looked for Persimmon. They cut their dividend by 75%, I think, which is quite the cyclical whack. And you sort of expect that a bit, I guess, if you're a Persimmon shareholder. You can see the housing market is going the wrong way. You've got to expect your dividend to be lower because they dividend out more or less as much as they can. And that's fine. There's nothing wrong with that as a policy, but some years that will be more than other things. The reason I didn't particularly go for these was because there's still kind of issues as far as I can tell around inflation being too high. It went up again this month, and that means interest rates are going to have to rise more. And I think that's what the real headwind is for Persimmon. I think higher rates are going to slow down mortgages. I know they're starting to stabilise a bit, but I worry that they've still got a bit of rolling off to do here. And as rates become more expensive and rates become higher, mortgages become more expensive, house buying becomes more difficult, demand for houses goes down. I think they've still got some time left in the wilderness here. I'm not particularly interested in trying to time the bottom here, and if I were interested in a house build in general, I'd still be waiting. I've heard better things about Taylor Wimpey from various people, including I think you at one point, Steve, and that might be where I would look, but at the moment I'm staying away from sort of house building. Segro, I wonder about this. I won't say what I think about Segro just for a moment, but I think there might be a better chance here because rents are staying strong, as far as I can tell, in kind of industrial real estate. We'll come back to industrial real estate a bit later in the show when I'm talking about some other stocks, but I'm kind of interested in this here. And I guess one of the kind of things that's weighing on me a bit, and that I really don't want to weigh on me very much, is I'd love to try and get this below where Paul did. And that's a really annoying and really stupid thing to get anchored to. But under Paul would be great. Yeah? Where's he?
No, last time I asked him, he was about 20 or 30% down.
Oh, cool. And it's got worse since then, I imagine.
Yeah, I'll lend you the ticker meter. Get buying. I'll lend you the ticker meter. You can have it behind you. Yeah, it'd be great.
Thanks. Well, Segro's on my list, actually, to have a look at then in that case. Look at quite seriously, a bit more carefully. I'm more optimistic about that than I am about Persimmon. But that's the UK news that caught my eye this week. Anything else on that, Steve? Or
we got some industry news through this morning. One of the juniors was reading one of our industry news articles or whatever, and he said that the average house price had fallen about 3%. I'm not clear on what area it was, which puts our prediction of, I think we were mostly predicting about 8 to 10% between a lot of us. That puts our prediction sort of squarely in the headlights there, Steve. I think we might be on. We got a lot of flack for that. I mean, you guys don't usually do the comment section, so you probably won't know it, but there's people going, you guys are stupid, it's going to be more than that. And literally every morning I wake up thinking, if it falls between 8 and 10, I'm going to hurry back to that comment section and be like, where are you now? But yeah, that was it for that bit. But yeah, we had a bit of positive news for Britain, post-Brexit Britain, I guess we would call it. We have recently joined the CP. Oh bloody hell! I better do that again. We have recently joined the CPTPP. Steve, do you know what that means?
The what? Sorry, say again.
The CPTPP.
No, I don't. Tell me.
It is the Comprehensive and Progressive Agreement for Trans-Pacific Partnership.
Oh, right.
So this was announced today. It's got 11 basically Pacific countries in it. Apparently unlocks our access to a region with gross domestic product of about 11 trillion. That's in pounds. It's our biggest post-Brexit trade deal, and that makes us the first European nation to join the CPTPP since it's come into force. I think it's only been around since about 2018. So in the press release, we said that the deal will cut tariffs on exports of food, drink and cars. They'll grant access to a market of around 500 million people. It'd be worth about 15% of global GDP once the UK joins the trade bloc. They reckon that by joining it, it's going to boost our economy by about £1.8 billion in the long term. They think it will lift wages by about 800 million if you're comparing it back to 2019 levels. The Trade Secretary, Kemi Badenoch, said, the deal sends a powerful signal that Britain is using its post-Brexit freedoms to reach out to new markets around the world and grow our economy. So, Steve, Recession is definitely cancelled.
Yep, Recession is cancelled. Everything in the FTSE 100 by exporting food stocks from the UK, you were saying.
Yeah, pretty much. I've got a little bit more on it, Steve, which you might want to have before I let you go to comment. But yeah, independent people who have actually analysed the deal have said that this is going to raise Britain's long-term domestic GDP by just 0.08%, and it'll have little to no impact offsetting European trade losses as a result of Brexit. But it's something positive.
0.08% is up. As I keep telling myself when I look at my portfolio. Green is green. That's more than we were going to get before. Okay, so it's quite a lot of work, and I'm guessing that I'm not sure what I'm guessing actually, but I sort of wonder, let's say, how far this kind of factors in the costs associated with undoing EU kind of trade deals and redoing them again. So there's a loss of trade that comes, and that gets kind of redrawn and so on. If we've just swapped one kind of trading union, as it were, for another trading union, that might be an expensive switch for 0.08 of a percent, you were saying. So maybe not. I guess I'm pleased to see that the people who... well, I don't know, I don't speak for them, but the people who voted for Brexit, I think, are getting something approaching what they wanted. I know there's quite a lot of dissatisfaction about the way the UK exited the European Union from the people who voted to do that. Presumably this was at least part of the thinking. This sounds a bit more positive, at least, anyway.
It does. This sounds like finally something that people who talked about the Brexit benefit could actually point to as a Brexit benefit. It gives them something. I mean, it's 0.08% if you're a critic. I guess it's something. The other thing to note about this deal is that China has actually applied to join this bloc. They applied to join it in late 2021, I think, but up until now have not actually officially joined it. So if China was to join it, it could get a lot more interesting. At the moment, I think it's a bit of a fluff piece, really.
Yeah, nice to have some kind of positive news, even if it's not really massive news. I mean, it's roughly similar to the idea that past GDP numbers are slightly higher than they used to be. In case anyone was wondering, it's a pretty slow week this week.